Hello everyone, welcome to the Stock Trading Tutor channel. If you'd like to create a free DMAT account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robot trading software for free. Now let's look at pivot points. So what is a pivot point? In financial markets, a pivot point is a price level that is used by traders as a possible indicator of market movement. A pivot point is calculated as an average of significant prices, that is, the highest price, the lowest price, and the closing price, from the performance of a market in the previous trading period. It is customary to calculate additional levels of support and resistance below and above the pivot point, respectively, by subtracting or adding price differentials calculated from previous trading ranges of the market. How to calculate the pivot point? Several methods exist for calculating the pivot point of a market. Most commonly, it is the arithmetic average of the highest price, the lowest price, and the closing prices of the market in the previous trading period. So, as we can see in this equation here we have added the highest price, the lowest price, and the closing price of the previous trading period and divided it by 3. And that will give you the pivot point. So next, sometimes the average also includes the previous period or the current period's opening price. So as we can see in this here we have the opening price, the highest, lowest, and the closing price, and we have divided that by the 4. In other cases, traders like to emphasize the closing price. So here we have again the highest, lowest, closing price, and the closing price. And then we have this divided by 4. And next is when traders prefer to have the current period's opening price. So once you add in the current period's opening price and then along with the highest, lowest, and the closing opening price or closing price of the previous day, then we will have the pivot point. Next, let's look at the support and resistance level. Data from the previous day's trading range is used as an input to generate 5 pivot point levels. The pivot point levels are comprised of a pivot point, 2 higher resistance levels known as R1 and R2, and 2 lower pivot point supports known as support 1 and support 2 or S1 and S2. Each resistance level is considered a pivot point. So here we have the image here. So if this is the pivot point, this here is the resistance level, this is the second resistance, and if you prefer, you can also have a third resistance levels. And below the pivot point here, we have the support level 1, 2, and 3. So the pivot point is calculated based on the high, low, and the closing of this day, so this here. So the first resistance on the upside of the market is given by the lower width of the prior trading added to the pivot point price. So here we have the resistance level here and the pivot point, then the price and the lowest price. So this will be given as 2 into P minus L. So again for the support it is similar except we'll be subtracting this value, the highest price minus the pivot point. The first support on the downside is the width of the upper part of the prior trading range below the pivot point. The second set of resistance and support levels are simply determined from the full width of the prior trading range, that is the highest price minus the lowest price, added to and subtracted from the pivot point respectively. So the second resistance level, you'll need to subtract the highest price minus the lowest price from the pivot level. So if you add it to the point, you'll get the second resistance level, and if you subtract this value from the pivot point, you'll get the support level. Commonly, a third set is also calculated in the same way as the second resistance levels. And to conclude, pivot points offer chartists a methodology to determine price direction and then set support and resistance levels. Sometimes the market starts above or below the pivot point. The concepts behind pivot points can be applied across various time frames. On a final note, sometimes the second or third support or resistance levels are not seen on the chart. This is because their levels exceed the price scale on the right, means they are off the chart. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. If you'd like to create a free DMAT account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robot trading software for free.